$1 trillion. That's the valuation OpenAI is reportedly targeting for its IPO. And if it hits that number, it would be the largest public debut in the history of financial markets. Not the largest tech IPO, the largest IPO. Period. Here's everything you need to know. Let's put that number in perspective, because $1 trillion gets thrown around a lot these days, and people have stopped flinching at it. They shouldn't. The biggest IPOs in history, the ones that redefined markets, reshaped industries, and made headlines for years, didn't come close to that number at the time they went public. OpenAI is essentially claiming it deserves to walk in the door at a valuation that took other companies decades to reach after going public. So let's look at the 5 biggest IPOs in history and see what we're actually comparing here. Saudi Aramco went public in December 2019 and raised around $25.6 billion in its IPO, with a valuation near $1.7 trillion, making it the largest IPO by valuation ever recorded at the time. Alibaba went public on the New York Stock Exchange in 2014, raising $25 billion and valuing the company at roughly $168 billion on day one. Then there's SoftBank, which IPO'd on the Tokyo Stock Exchange back in 1994 and has since grown into one of the most influential tech investment vehicles on the planet. Agricultural Bank of China and Industrial and Commercial Bank of China, ICBC, round out the historic top 5, both raising massive sums during China's financial sector expansion in the 2000s. Here's the part that should give you pause. Most of these companies, Aramco, Alibaba, the Chinese banks, had actual revenue, actual profits, and proven business models before they went public. They weren't asking investors to price in a future. They were presenting a present. OpenAI is a different kind of bet entirely. It's asking the market to believe that its current trajectory, its current dominance in AI, and its current product ecosystem will sustain $1 trillion valuation going forward. Now, is that entirely unreasonable? Look, I've watched a lot of hype cycles in Silicon Valley. Most of them end with a correction and a lot of embarrassed investors. But OpenAI isn't purely speculative fiction either. ChatGPT has over 300 million weekly active users. The company is reportedly generating significant and growing revenue. Microsoft has already committed billions. The product is real, people are using it, and it has genuine enterprise adoption at scale. That's more substance than a lot of unicorns had when they went public. But here's what the comparison to history actually tells us. Of those 5 historic IPOs, not all of them are doing well today. Some of them, particularly the Chinese financial sector giants, have seen their valuations stagnate or decline significantly in the years since going public. Even Alibaba, which was once celebrated as one of the greatest growth stories in tech history, has faced regulatory crackdowns, geopolitical pressure, and a stock price that is nowhere near its peak. A massive IPO doesn't guarantee a massive future. The question the market will have to answer when OpenAI actually files is simple. Are you buying into what it is right now, or what you believe it will become? Because at $1 trillion valuation, you are paying for a version of OpenAI that doesn't exist yet. You're paying for the AI future, not the AI present. What to watch? The actual IPO filing, which will reveal revenue figures, cost structures, and Microsoft's specific ownership stake for the first time. Those numbers will either justify the ambition or expose the gap between the story and the spreadsheet. $1 trillion debut would rewrite the record books. Whether it rewrites them in the way OpenAI hopes, that's the question investors, analysts, and frankly anyone who uses AI tools daily should be watching very closely. The history of big IPOs says this: the entrance is never the whole story.